Hi traders, in this very video I'm going to be showing you guys exactly how I trade with order blocks and breaker block. This is one of the trade I took right here, taking the trade from an order block, and the see this trade hitting full TP 1:7 risk to reward ratio. In this video I'm going to give you step-by-step guide on how I take trades from an order block, or how I take trade in an order block or in a breaker block. Now this is another trade right here. I took it from an order block, and this trade hit full TP, almost 1:5 risk to reward ratio. In this video now, I'm going to break it down in a way every one of you is going to understand it. The confirmation I see why I take trade from these regions. And if you notice all of these regions, all of these points, once the price just gets there, it's going to start dropping. The other one, once the price gets there, it started buying, right? There are some confluences in this, right? This is one of the trade I took right here. This trade, I got stopped out on this very trade. I was taking it from an order block, so it's also part of it. This strategy does not work 100% all the time, so I'm gonna give you scenario where it's gonna work, then scenario where it's not likely gonna work. This video is gonna be a step-by-step guide, so watch till the very end of the video and know exactly how I trade with order blocks and breaker block. Without further ado, let's jump right into the video. I believe you already know what order block is. For those that don't know, order block is generally the last opposite candle before a move, right? This is what I mean. The price pushed up, was going up, and immediately got here, started selling. Automatically, this candle, this was the last blue candle it formed. If your candle is green, that's the last green candle it formed. Before it started showing red candle, started going down. So automatically, this blue candle right here is an order block. You can mark it out like this. From the very bottom of the OB, from the very bottom of this candle to the top of this candle is another block. And this area now is a supplying level, is a resistance level. Why? Because it's at the top. It's not at the bottom of the price. It's at the top of the price. It's a selling order block, a bearish order block. Another block where you wait for the price to come and you want to sell. Why do you want to sell? Because this is a key high, a key supplying level. You should know what a supply level is, right? Supply and demand. This is a key supplying level. And what the price tends to do is once the price gets to a supply level, it will tend to sell. So this is an order block now where you will likely be taking the sell from. So that's how you mark out order block. The last candle before the move. The price was going up. This was the last candle before it started dropping. The price was going down. This was the last black candle before it started going up at this point. This was the last candle before it started going down. So all of these different candles are order block. You can easily see the price went down. This was the last black candle it formed before pushing up. This same trade I took right here. This same buy I took right here. This was the last black candle it formed before it started pushing up. Right? So automatically on tapping on this my order block now, this was the last black candle it formed again, and this last black candle is also an order block on its own, right? And this very order block I took the buy from now is a demanding order block, another block where I bought from. Why this other one? I'm also waiting for price to come here so I can buy again. It's also a demanding order block. Why a supplying order block now is where you sell from. This is a point where the price pushed up to and started coming down. Automatically, the last candle right there was this very one, of which this very last blue candle before the price started showing black candle, because my chart is black and blue. Yours can be green and red. If you know, if it's going up, it's gonna be green. Then if it's going down, it's gonna be red. So the last opposite candle before it started reversing in the opposite direction. Right now, this is the order block. And what did the price did? Come tap on it. It's a supplying order block where I would likely take a sell from. Right? So I believe you now know how to mark out your order block. Right? I believe you now know how to mark out your order block, what an order block is. If someone goes and tell you, show me an order block on the chart, I believe you can now show someone order block. Now let's not waste time again. The next thing is a breaker block. I'm going to show you how I trade it, how I take trade from these regions. What's going to make an order block valid, and what's going to make you take trade from an order block. You can't just go and start marking out all of these order block and start thinking of buying or selling from them. Some of them are not valid. Right? I'm going to give you what's going to make it valid. Now, a breaker block is a failed order block. Like this very move now, I marked out this area. I was trying to buy. Then what did the price do? The price came, took me out, right? Took me out, hit my stop loss without buying from there. Automatically taking me out, this area now has now turned into a breaker block. From this very region, it was an order block where I wanted to buy from. It's just like your supply level turning into a demand level, or your demand level turning into a supply level. Or some traders are gonna say support turning into a resistance, or a resistance turning into a support. But this one now is in a more defined way, right? In a more defined way. Price can't just get to a demand level and start buying. It's gonna most time consolidate, provide some price action before it will buy. But in an order block, it's always sniper entry. That's why it's important to study this. It's always sniper entry. As the price just trigger your trade, it's gonna start moving if that order block is actually valid. Now this order block now got violated. The price stopped me out. I remember I sent out this signal. I sent out this signal straight up to the Telegram. The link is in the description. You can join. It's 100% free. Right? I sent out this gold buy signal. This was not the first trade. This was the first signal I sent out. This very sell on USD JPY. So let's check out the trade signal I sent out. Right? So let's see. I sent out the sell signal right there on my Telegram. The Telegram is free. Take a look at the setup right here. This was where I had this setup, right? This was where I had the setup. This other block was valid, and what happened? It collapsed and hit full TP, right? Giving us over 177 pips. Then this other one now did not work. Now this other block has failed. Automatically marking it forward or dragging it forward, it's now a breaker block. So a breaker block now is a failed order block. So as I drag this forward now, it's now a breaker block. It's now a level where I want the price to come to and I sell. Simple. I will now do the opposite of what I was doing before. Just like my support turning into a resistance or my resistance turning into a support. Right, so now that's what a breaker block is. Now let's start confirming things. All right, let me start giving you all the confirmation, all the confluences that make me take trade from an order block. Exactly how I take trade from an order block. So I've explained what order block is. You now know. Now, for me to take a trade from an order block, there are two things I do want to see. If the order block does not have these two things, that means I will not take the trade from that order block or from that breaker block. The first thing now is the OB should have a break of structure, should lead to a BOS. The order block I'm marking out or the breaker block I'm marking out should lead to a break of structure. What does that mean? With this strategy, this is not the complete. I'm just teaching you how I trade order block. I'm not teaching about market structure. This is not complete, right? There are some things you need to know: market structure, your break of structure, change of character, and you need to understand all of that. The swing market structure, internal market structure. You need to understand all of that. If you want to understand all of this from me, go watch my YouTube videos, and you're gonna learn them. If you want to learn it from me directly under my mentorship, I have a mentorship class, right? Where I teach students how I trade, how I go about this every single time. So there's a link in the description if you want to join the mentorship class. You can always contact us. Our WhatsApp number is also in the description. That's just by the way. Now, what's the break of structure? If you are just hearing it for the first time, I just made mention of something. The other block should lead to a break of structure, a BOS. What does that mean? If I mark out any other block, remember, order block now is the last candle. Let's say the price sold off, got here. That means it's going to have an order block here, right? Then push up. Automatically, I'm going to have an order block right here. I'm going to mark it out. For me to start considering taking any buy from this order block, it needs to first push up to break this high as a break of structure. So a break of structure is a break above the previous high or the previous low. Let's say the price had this low, then after creating this low, it went up. On coming back now, it broke past that very low. That's a break of structure. It created this other low again, it went up. On coming back now, it broke past that very low. Same thing right here. It had this high, it went down, created another block. This other block now pushed the price up, and on coming up, the price broke past that very high. That's what a break of structure is. So if the other block does not have a break of structure, I'm not going to consider it. It's not going to be valid for me. Now, that's the first thing. Then the second thing I want to see my other block have The second thing I want to see my order block have is the liquidity. Right now, liquidity is extremely important. I guess that was what I discussed, I guess, in my last video. So you can always check out that very video. I'm gonna drop the link in the description. Check out that video. If you want to learn it directly from me, you don't have to stress yourself watching YouTube videos. I have a one-on-one class, I have a general class where you can always join and then learn directly from me. I'm gonna give you step by step the time frame I use, everything I need. Right now, liquidity is money in the market where we have stop loss, where we have resting orders, where people have their stop loss. Now, this is a point. Let me just briefly explain liquidity briefly, right? So we can continue. This is a point I want to buy from. This is another block. And what do I want to do? I want to buy from this other block because it's a demanding order block. It's another block at the bottom. I want the price to come there and I buy. If it's at the top, supplying order block. I want the price to get there, then I sell. Now, at this very region now, I have my stop loss right below this very low. And every trader who are also doing the same thing have their stop loss below this very low, below this very order block. So we have so much liquidities, we have so much money, we have so much stop loss resting right there. If the price is able to go down, just go down a little, go below this very low, it's gonna stop me out, stop you out, stop so many traders out of the market. And once they get stopped out, they will provide enough liquidity into the market. So those institutional traders, those bigger banks can start taking their buys. They can now start entering their buys since there is now enough money in the market for them to enter into their buys. So now, if I've just been stopped out now, it means this order block was not the actual order block. It was just an inducement. It was just a fake out. It was just a liquidity for the institutional traders to enter into the market. Now, what do you want to see? Before you take your buy from here, you want to see that the price had or have a low push up. And what do you expect? You want the price to take out that very low as the liquidity instead of the price taking you out. It's going to just take out all of those traders who buy from here, take them out, tap on your own order block, and beautifully buy. Right now, taking all of those traders out, and the price has just gotten the liquidity, which is going to fuel the move, which is going to help them enter the market. So simple, they can now enter the market. So these are the two things that's going to make an order block valid for me. Many of you don't know about this liquidity. You don't know, even in my YouTube video, you won't get everything, right? I have three main liquidity I use with this strategy. So if you want to learn these three, just go to my mentorship class and join, and then you learn it, right? The mentorship fee is about $40 for 3 months. $40 will be me for 3 months. In Naira is about 50,000 Naira. Then for one-on-one, if you want me to teach you one-on-one, it's about $170. In Naira is about, I guess, 200,000 Naira. So if you go there, you message the number in the description, you join. I'll send you the live class schedule link, where I'll send you the live class schedule, the time and days for our classes. Then you'll be added to the mentorship class group, where you have the general group, the announcement group, then the free signal, where I drop signals for my traders, right, for my students. Then you'll start joining classes. Classes is always recorded. You'll get the recording after each class. So that's just by the way. If you wish to join, just go jump on the description and then join. Now, we have three main liquidity that the price will create. Since liquidity is important, we have three main ways the price is going to get the liquidity. Right? The first one now is the low before the order block. When the price has a low before the order block. Now, in this case of this trade I took right here, in the case of this very trade I took right here, this very first sell, or this very first buy, this low now was acting as my liquidity. I use this very low as my liquidity. But since the price was not interested in buying, it was not able to buy. If it was interested in buying, it's going to use this low as liquidity, tap on this other block and start buying. But since the price was not interested in buying, what happened? It just kept collapsing. It did not take me out before buying. But instead, it just keep collapsing and keep going down. Why? Because sellers are now in charge. Now, let's take a look at a nice example. This is the last candle before the price started dropping. Automatically, this is another block. And what just happened? When the price came there, what happened? The price came, stop you out. You were trying to sell from here, stop you out before it started dropping. Why did the price did that? Just to hit your stop loss and get enough liquidity so those institutional traders can execute their sell order. That's why the price always do that, just to stop you out and so those institutional traders can enter the market. Similar thing right here. When I took this very trade, this was a low I was using as my liquidity. And the price taking out that low tap on my OB, my order block, and started pushing. These are this sell I took right here. This was a high. I did this when we took this very trade. It was a live trading with my students, right? So let me see if I'm gonna find some proof so you guys can easily understand what I'm saying or see what I'm saying. Let me see if I'm gonna find some proof. Right when I took that very trade, it was with my students. We took it live. I took it live with them, right? Let me see if I'm gonna see. Guess it's in our April mentorship class. All right, so this is the general group, right, for April mentorship class. If you pay, you'll be added to this group. Now, all my setup, I do send to them, and they do drop charts, and I correct them just like that. Now, this was after the class. This was what was happening, right? So we did the class on Tuesday, right? And this was the setup I had. I sent to them, and it was a live trading section, right? We did it live. Take a look at what I did right here. Live trading, who is active? And they reacted, active, active, active. First thing I sent was, I'm on seat, right? Let's make money. And they replied, active, forever ready, active. Then I said, let's do live trading. Then I sent them the Zoom link. This was the link on Zoom. So I asked them to join the live class, and they all joined. And take a look at this. Mentor that does not have pride, related with mentee, students, like friends, right? This is not even a crazy one, right? There's another crazy one where they were all making money from that very setup, from that very sell signal I sent out. Simple, right? That's just how I keep doing it. Now, I took that very trade when the price has taken out this very high as the liquidity, which is protecting this order block. And on tapping on this other block, we did not catch it from this move. We did not enter from here, from this very extreme move. If we entered from there, our stop loss is going to be so small, because if the price is going to respect that other block, it won't go deep before going down. So now, if we took the trade from this OB now, our stop loss is going to be about 21 pips. We're going to target this very low, which is where we target. And on targeting there now with this trade, it's about 1:9 risk to reward ratio. Just imagine you taking 1:9 risk to reward ratio, right? And we didn't enter from there, but since when I just saw the sell, I told them that it's gonna work. Right? I dropped the signal in my WhatsApp before I dropped it in my Telegram. Take a look at the signal on my Telegram. Sell GBP, USD JPY now, and stop loss was about 37 pips. Right? Take a look at it. 37 pips right there. And we won 177 pips right here. 1:4.7 risk to reward ratio. So simple. We did this analysis live with my students, and I sent it out to the Telegram also, so they can also make money. And in a few minutes, you are seeing what my students were saying, right? Let me see if I'm going to zoom it. Just take a look at this. Take a look at this. Respect, sir. I really can't believe why you are so good in analyzing, right? Seeing my trade in all blues running, just wow, right? Like, boss is so good, unless even just read through and then know, right? It's just simple. It's just so simple, right? Trading is simple if you actually know what you're doing. Now, that was a high I used as my liquidity. Using this high as a liquidity now, that traders are gonna get stopped out on. Traders will get stopped out, and the price will use it as liquidity to tap on my OB. Then I can take my sell. Another one happened right here. This is the order block, the last candle before the price started selling. One of my students caught this very move. He sent it to the general group. I saw the move. I saw him when he sent it. Now, this was a high, which the price is gonna use as a liquidity. And where's my break of structure? Right here. With those two things now, my order block is now valid. I can take my sell. And what happened? What did I say? Immediately If the price is going to respect that order block, immediately tap on it. It's supposed to start dropping. And you're risking 20 pips now, targeting this low, already give you 1:5 risk to reward ratio. It's not your normal 1:2, 1:1, right? Crazy risk to reward ratio. If you actually know what you are doing, my own personal trade, this very trade I took on gold, it was a personal trade, 1:7 risk to reward ratio. There's another sell I took on gold today, but we got stopped out. We got stopped out on this second sell. On this very sell, I was expecting 1:10 risk to reward ratio, right? On this very buy I sent out, I was expecting 1:8 risk to reward ratio. All my trades, that's what I keep doing. 1:4, 1:3, 1:3, 1:5, just like that, right? Now, using that high as a liquidity now, taking out that high, the price started rallying down, right? That's just all the market wants. If the price is able to go over, stop all of those traders out, it's going to start moving, either going up or going down. Simple as ABC. Then it has a break of structure. It has this high as a liquidity. Then I can take my sell from here. Taking my sell, stop loss just slightly above it. If there's any weak rejection above that high, you want to make sure your stop loss is above that weak high. Then you can target this next low, which you expect the price to break as a break of structure. On taking out that low as a break of structure now, it's going to create another order block, which is going to be somewhere here. So this is a point now. I'm now waiting to sell this very currency. So I'm going to likely just send out this signal, share up to my students, and also share up to the Telegram. Targeting this very low, 1:5. Using this high, which the price has already created as my liquidity to take this very sell. Right, simple. And I'm going to see if it's going to play out well. So we are currently on a trade. I sent out this signal straight up to my students right today. I also sent out to the Telegram. Using this low as my liquidity, using all of this low as my liquidity, I'm taking my buy from this very order block, from this very last opposite candle before the price started buying. This very one right here, marking it out from the bottom straight up to the top. This very one right here. And what happened? This order block had this break as a break of structure. Automatically, that's the point I'm waiting for the price to come, so I will buy. Targeting 1:6.8 breaks to reward ratio. So if this video was helpful, don't forget, like the video, subscribe, and for more videos like this, turn on the notification bell so you'll be the first person to get a notification anytime I drop a new video. And also, if the video was helpful, you'll later become profitable watching my videos. Go over, share with your friends so they can as well come, learn, and start becoming profitable. Not just to deposit, keep blowing account, right? Make money from the market. The Forex market transacts over $7 trillion every single day, right? Try and make at least $100 a day from the market. It's possible even with your small account, right? With your small account. If I take this very trade now, risking $10, I'm going to make $68 from this very trade. If I risk just $10 on this very trade, right? It's just so simple. Your account is small. If you are good, you're going to grow it. 1:7. If I risk $1, I'm going to make $7. Right? If I risk $2, I'm going to make 2 times $7. Right? It's just so simple. And just rewatch the video, try and get everything I've said. And I will see you all in the very next video.